Hi, my name is Fan Yang, your Chief Technical Strategist here at ForexMinute.com. You're watching today's Forex video briefing. It is Friday, August 15, and we're in the middle of the U.S. session. As we wrap up another weekly session, we are seeing strong sell-offs in commodities and metals. Let's take a look at oil, gold, and silver charts and what this sell-off means for them from the technical perspective. Gold was trying to break above this week's descending triangle yesterday after it broke above a falling wedge last week. However, we saw price slide sharply today, breaking below the triangle support at 1305. This price action is threatening to invalidate last week's bullish breakout signal. However, we are seeing some support in the 1290, 1295 area. I was talking about this buy on a dip strategy all week, and I guess traders had the same idea here because we are currently seeing price, come back above 1305, and then now it's below it. So we're seeing some volatility here, but we are definitely seeing some buyers. So just be careful because all this price action could be just noise. If we break above 1315, we could look at a bullish outlook in the short term, but unless it breaks above this triangle resistance in the daily chart, price in 2014 is basically in consolidation and in contraction, so there's no direction. To the downside, a break below 1260, at least below this 1268 area, will be needed to open up a bearish outlook. Again, otherwise we're in this sideways contraction, noise, choppy market. Okay, I personally have a slight bullish bias since June, and that bias is still operating. Looking at the 4-hour chart. Okay. Once again, if price can come up, hold above 1290, come back up above 1315, then that bullish bias gets even stronger. Silver on the daily chart is also in consolidation and also showed some bullish bias since June. However, it has turned bearish in a more persistent manner, and today's dip is reaffirming that bearish outlook towards the lows on the year around 18.70. When you look at the 4-hour chart, you see a break below this consolidation range that has been developing for a couple of weeks now, and around between 19.74 and 20.17. Now you can say that there is a central pivot around 20. So today's sell-off, like I said, broke below this range, and if a pullback then holds under 20, that central pivot, then the bearish outlook remains. However, a break back above 20 would give the bearish outlook some trouble, especially if it breaks above this falling channel resistance. Okay. However, if price can't push back above 20.17, or if it does only briefly and comes right back down and falls below 20, again, then price would remain focused to the downside toward that 2014 low around 18.70. WTI crude oil prices consolidated in May above 96.56 and below 98.67. Yesterday we had a sharp sell-off that broke below this consolidation range, extending the prevailing bearish trend. If there is a pullback, watch out for sellers in the 96.50 to 60 area, this previous support. The central pivot of this previous consolidation range is around 97.74. This means that if price pulls back and manages to break above 97.75, we can be looking at a bullish correction to extend into the short and medium term. However, if price holds below 97.70, for example, the WTI crude oil will remain bearish with the 2014 lows around 91.25 in sight. And that wraps it up for today's Forex video briefing. Once again, I'm Fan Yang, wishing you a great weekend.